Arindam Ghosh, CEO at Blackridge Capital Advisors as well, joins us on the show right now. Arindam, a quiet session yesterday, this morning, looking at the SGX as well, it seems like at least it's going to be a quiet start. Penultimate day today. How does one brace ourselves for what we may see tomorrow?
Morning. I think, the Indian markets, of course, has seen a spectacular run over the last 6 months. Barring that brief period of lull that we had in April, despite, strong global as well as economic headwinds, and now culminating into this mega event, as you mentioned. So I think, of course, the market has got itself into a celebration mood. Based on the exit polls, which have been out in the market. And of course, everybody has been, kind of pinning their hopes on the possibility of a decisive, stable government in the center. So I think, what we have seen so far in terms of, very significant up moves over the last, 4 or 5, sessions, could well be a curtain raiser for, bigger things to come. I think what is important, to understand is the fact that the possibility of a fractured mandate, is kind of ruled out. So the downside, for the market is therefore, going to be limited from here. And of course, we would have periods of consolidation, but clearly, the direction of the market is on the up.
And then the downside definitely is capped, but what our viewers are interested in, how much more upside to go? Do they hold on long, add more positions? Is today the right day to make most of what may transpire tomorrow as well as on Monday?
Well, I think, as an investor, there is no reason, to, kind of take money off the table, particularly in an environment where there is this promise of a stable government, kind of, moving in. And therefore, every consolidation should be used as an opportunity to only add to the existing position. For a conservative trader, of course, it would make sense to take some profits off the table. But if you're an aggressive trader, you would still like to bet, for the rest of the series.
What gives you the hope that, tomorrow is going to be better than today? Earnings have not bottomed out. Macro indicators are still not in place. As of now, markets have only gone up on hope and assumption that change of guard is really going to change the fortunes of India.
Well, there are, a host of, factors, which are at play here. We, of course, there is no denying the fact that, there are serious issues. The state of the Indian economy is extremely fragile. Of course, there have been improvements over the last, 4, 5, 6 months as far as the leading macroeconomic indicators are concerned. But still, I think, it's a long, long way to go. But the very fact that, there is this possibility of a stable government which can come in, which can unleash a whole set of reforms, go aggressively, for some of the low-hanging fruits, and try to, improve the investment climate. I think that's the, first step, which the new government should try to do, which in turn would boost the investor confidence and reassure investor confidence globally. And that would definitely, be the first thing that is going to be, watched out. Also the fact that, we have, of course, the downside risk of a poor monsoon, the fact that, fiscal deficit can, be a challenge, for the new government. But I think, we would see definitely a change in the quality of flows that are now going to start coming into the Indian market. There is no denying that, we have some amount of speculative money which has come in, as a precursor to the big event. But once that kind of, probably moves out because of profit booking, definitely we would see some of the longer term money coming to, start coming into India. And also we need to bear in mind that, the pace of recovery, for the Indian economy can be far more, than the pace of recovery from some of the emerging market peers. Of course, there is today a valuation gap between the developed markets and the emerging markets, and there is a possibility of some kind of a re-rating happening, though it's too early to kind of say that. But if you look at some of the other bigger emerging markets, and if you look at India, definitely India continues to remain in a sweet spot, and increasingly I think India has a strong chance of getting decoupled temporarily, where we can see serious long-term money starting to come into India.
Now every tree has a seasonal fruit, and for the moment looks like the seasonal fruit is PSU.
Well, that's largely because of the track record of probably NDA and what really has happened, and in the past, what kind of an approach that they have had even at the state level. And to that extent, I think that's one area where which is going to see increasingly a lot of action, a lot of reforms, possibly a whole lot of committees being set up to kind of look into various aspects and try and see how increased or greater level of efficiency can be brought in. We've already seen the Dr. Nayak committee report. Of course, it remains to be seen how much of that is kind of going to be followed upon and acted upon. But clearly these are steps in the right direction. I think as an entire pack, there are extremely well-run companies which have been severely beaten down, for a variety of reasons which we are all aware. And if I think we can have initiatives or steps taken which will re-energize and bring in professional management, I think definitely the entire basket, just not the banks, would have a strong possibility of getting re-rated. And most of these stocks are under owned. They are looking extremely attractive from a valuation perspective. And I think if we just ignore the kind of rotation of money that we have seen probably into that entire PSU pack and the kind of moves that we have seen, but these are probably just the beginning of what can be a significant re-rating for the sector going forward.
So do you own PSU stocks in the portfolios you manage, Arindam?
Really
do you have exposure to PSU stocks in the portfolios you manage? If yes, what are the names you own?
It's hard to kind of talk about specific names, but I think overall this would probably, as I explained, is definitely an under-owned sector, and it's not that the opportunity has gone by. I think there is opportunity now at these kind of levels, and probably if we get into some kind of a immediate consolidation phase, after tomorrow, to kind of start building long positions gradually. I think a lot will also depend on what kind of measures the new government starts to take in terms of revival of that entire sector, but then that's much anticipated, and we do expect that the upside from here can be quite significant.
And then coming on a name like ITC and Asian Paints, quality FMCG names, expensive stocks, but they've not corrected.
Markets, always tend to kind of pay a premium for, high quality stocks, and the names that you mentioned definitely, are standout names in their respective sectors. Investors definitely, I think, in the run-up to the budget, can, keep adding to their exposure to both these stocks, as well as a couple of other very strong names in the overall FMCG basket. The fact is that the next big event, which is probably going to outline or the course that the government is going to take, would definitely get spelled out in the budget, and probably a couple of weeks before that. I mean, irrespective of that, I think these stocks definitely are good bets to have, and they are typically market neutral. and they tend to perform in both, the downturn as well as, in a high growth kind of an environment. So these are stocks you should always have in your portfolio and use every opportunity, every dip in the market to kind of keep adding.
Arindam, what is your own sense on the prospects of companies like Tata Steel, wherein in the last month or so we have seen a good rally, but do you think this tilt towards metals is going to last for too long?
We've been consistently negative on the entire metal space. I think that's largely because of the fact that the demand recovery is yet to pick up in a significant way. I think the first big step probably is going to happen tomorrow when we have a stable government. In terms of the roadmap for the entire investment cycle, capex cycle to kind of pick up, which in turn is going to lead to recovery in demand. But till we actually get to see a significant amount of traction starting to get built in the domestic economy, I think one should really stay away. These are speculative build-ups which has largely happened globally, as you're aware. There is huge amount of excess capacity. We are already kind of in a multi-year kind of a slowdown as far as China is concerned. A lot of surprises can actually come from that part of the world. So we would definitely like to stay away from the entire metal pack and not kind of get into any kind of a momentum trade or speculative trade at all.
Arindam, I want to get your thoughts in on Tech Mahindra. Good performance coming in, but do you think the rupee appreciation is what is playing spoil sport for the IT pack?
Well, I think, in the short term, there is a bit of, we've seen a bit of pressure on the entire IT pack, whether it's been the front line and probably more so on some of the mid-tier IT companies, largely on account of, because of the currency movement. But the sense is that, as long as, the global growth recovery is on track, and particularly in US and Europe recovering, I think IT would definitely, continue to do well. And we must also bear in mind that, ultimately over the longer term, as we have, the entire Fed tapering playing out and, interest rates start to move up, dollar definitely, would strengthen again against most of the other emerging market currencies. So I think these are good opportunities, to kind of get into some of these quality IT companies, and they had actually run up quite a bit, and therefore today what we are getting to see is definitely an opportunity to kind of get in, and probably will. Over the next couple of quarters, that's going to be the trend. But these could well be very good entry points for getting into some of these IT companies, including some of the names that you mentioned.
I just want to revisit what HDFC Bank is up to, considering the MSCI overnight in its new release has cut HDFC Bank's weightage now to 1.89% from the earlier 5.4%. Of course, there have been a lot of other additions as well, which we will talk about. But HDFC Bank, in predictable lines, has gotten off to a weak start. It's lower by about 0.6%. Arindam, do you think this whole FIPB on the FII limit issue is going to be a big overhang on HDFC Bank, and we may see further weakness in the stock price?
We've seen this kind of, impacting, stock prices for a couple of days, but then, some of these, strong frontline, companies, obviously take it in their stride, and even in the case of the name that you mentioned, I think we have seen a significant amount of up move despite the earlier restriction and constraint. So I think these are definitely irritants, and hopefully at some point in time it may there could be a better arrangement to kind of see how it doesn't really impact. But there is always, it gives an opportunity to kind of, use these kind of, corrections to get into, quality names, like the one that you mentioned.